morning, depending where you are in the world. My name is Courtney Charles. I am here to bring you another market breakdown, pre-market breakdown of the week ahead for the week commencing, what day is it tomorrow? Monday the 17th, all the way through to the 21st, Friday the 21st of August. As promised, I am bringing another weekly market breakdown. If you're watching on YouTube, then welcome back to Kairos Talents. As promised, I'll be doing these going forward and uploading them every Sunday, just for people to follow along and see how I prepare for the week ahead in the Forex market. And if you can gain some insights into the way I trade, been trading for 8.5 years now, then that's great. And hopefully you can gain some, like I said, some knowledge and insights. This is how I learned from my mentor. But without further ado, I will share my screen and we'll get straight into it. So let's make sure I get the right one first. Okay, we are good to go. If you didn't already know, we're in week 34. We're heading into week 34 of the year, so well over halfway. And as you'll see in the top right-hand corner of my screen, I have 7 instruments that I analyze and follow every week. I've just found this to be the optimal number for me. I don't like to trade too many instruments because I find that I can lose my way and lose my flow in the market. So DXY, and you'll see the DXY and the yen basket, the top 2 up here. And those are for purposes of reading which direction the dollar may be heading in, and then the Japanese yen as well. They are correlated with the pairs that I trade below, which is Aussie yen, euro pound, euro dollar, and pound dollar. And then I also have kind of like one wild card in there, which is Bitcoin. So BTC, USD, which I like to trade. And it also helps me to keep an eye on what's going on in the crypto market as well. So let's get into it. I always start on the weekly chart because I do top-down analysis. I just find it helps me to really gauge the direction that price is heading in. And what strikes me here about this overall, I call it a schematic that we see here, it really does look like an accumulation schematic. And accumulation is when price moves within a range, and basically it's a sideways range in price movement before price then kind of explodes, or trends rather, it might be a better way of saying it, in one particular direction. And what I notice here is this week right here, that is a telling sign, because price takes that low, and then what happens immediately after price takes that low is it begins to then start trending upwards. So we have a move up here, breaks this structure, breaks through a few higher time frame resistance zones, comes back down, makes a higher low here, and then we can see it continue to break structure again. And what I'm expecting, even though price was very bearish a couple of weeks, so bearish that week, and then now it's ranging. So we've got 2 doji bars there, which are ranging on a higher time frame support level. But I would expect in this region somewhere for a higher low to form, to then go up to continue the bullish trend that looks like it's in its early stages. But as we can see, price is the very definition of a bullish trend, is a higher high and a higher low. Here we have another higher high. So if the trend is to continue, a higher low would be forming in here. So on the higher time frames, that's what I'm looking at. Yes, we can see that price was very, very bearish a couple of weeks ago, but let's go down to the daily, because on the weekly chart, as I said, in this region, there were two doji candles. And I said last week that this was a possibility that price would just range sideways. It's quite normal when an explosive move happens to the downside for price to then just move sideways. And there are a few other things here, which when I go down to the 4 hour, you'll see are very telling. So let's go to the 4 hour. Right. So last week we were around about, I think, when did the price open? So we would have opened around here. Okay. So last week I explained that because price is moving sideways and we have highs here and lows here, that it is likely that price will just continue moving in a range. And we did see that. So price moved up, tested this level here, which is the lows of July. And I've explained quite a few times, but the monthly levels are very well respected. And it's likely that price will take a big news announcement or some sort of volatility to break and hold above or below a monthly level. And we can see here that price just nicked above these highs and then kind of found a bit of momentum to break through that level and tested it again. But still, the low of the week was formed on Friday during New York, and price held at support. So it's not very clear yet which direction price will be heading in, but what I can say is when price is moving sideways, usually means that there'll be a big explosive move either up or down. And for me, it's my job to kind of not anticipate, but just read price in the moment to see which is the most likely thing to happen. And because on the weekly level, I mean, you'd say that price is very bearish here, right? But on the weekly level, we're actually in a bullish trend, and the exponential moving averages are bullish as well. So still a little bit early to tell. The 1 hour probably doesn't tell much more of a story. It's just going to show again that price is just within a narrow range here. But what I did want to see, which I haven't looked at, is where is liquidity? So I like to look and see where the levels where price is likely to be drawn to. So there are lows here. So it wouldn't be unusual to see, let's go back to the 4 hour. It wouldn't be unusual to see price, doesn't have to do this by the way, but for price to dip below a level, taking out stops and then move higher. But either way, what we see here is this would be called the law of cause and effect. So what happens is when you see a big move, it's usually going to be because price has gathered sideways, ranged, and then it's like a spring, a coil winding up to then expand in either direction, up or down. So this is, if you can read the schematics, it allows you to position yourself into a trade before the explosive move. As I said, I don't trade the DXY. This instrument helps me to read euro dollar, which I do trade, because it is negatively correlated. So when the DXY the dollar index goes down, euro dollar will go up. So if I'm reading this clearly, it means that I could then position myself. If I'm looking, say, to trade. If the DXY is looking bearish, then it means I can position myself for longs in euro dollar. But let's move on to that's a DXY. But let's move on to the yen basket. I only trade one Japanese yen pair, which is Aussie dollar. It's not as accurately correlated with the DXY, but it is a good indication as to look for strength or weakness in the yen. Again, a couple of weeks ago, huge explosive move on the weekly time frame. But then as price approaches the top of the range, there's that big rejection candle, shooting star, if you will. And what's key is it was unable to hold above the monthly level of July. And then last week, we can see that bearish momentum continues. I did say last week I don't know what's going on there. I said last week in the breakdown that it's not unusual for the Japanese yen basket to kind of look like it's about to trend in a direction and then just completely retrace the whole move, which it did last week. So yeah, you can see that price was just bearish the whole week. It was unable to hold above these higher time frame. None of these levels were retested and held as support. So the first clue that price was going to be bearish was that it failed to hold. Well, it tried to test to go above that monthly high there, failed to hold with a selling tail or a rejection wick, and then price just gathered momentum, breaking this first level. So that was retested as support and failed. Then after it failed as support, it was tested as resistance and respected. And that meant that bearish price action continued for the week. So if price is to continue, if this is not a false move, all of this here, if that's just not a false breakout, price could hypothetically create a low here. And if we get a higher low here, maybe in line with this kind of level, something like that, then it could be that that is a true reversal for the yen to go bullish. And if that is the case, let's just go down to the 4 hour for a minute. So yeah, price just trickled down for the whole week. But if there is a higher low, if price finds support, you know, in this kind of area, then I would be looking for short positions on the Aussie yen because it is negatively correlated. On to the next, which is BTC USD. So Bitcoin, I do like to keep my eye on Bitcoin, and also it's well worth the trade every now and again for me because I trade the higher time frames and I tend to hold trades, or I try to hold trades. Just get rid of this for a moment. I'd like to start fresh. If I'm able to catch a trade and hold it for a while, once Bitcoin gathers momentum, it's just going to continue going. So you'll see there, and I don't mind catching one of those every now and again. When I say I don't mind, of course I don't mind, but I don't mind taking the odd trade on Bitcoin to catch a bigger move. It's more like a swing trade. But let's have a look at what happened last week. If I just pull these high time frame zones out. Okay, so can definitely see here price is within a tight range. There is a bearish inside bar. Inside bar just means price is ranging. You'll see it a lot more clearer when I go down to the daily level. I was suspecting that price could continue higher. Why is that? Never mind. Let's just pull that out. So last week I did suspect that price could go higher. Why? Because I thought it might test July's highs. And also I can't help but my eye being drawn to this level here, this high, this prominent high, and the other high that was created in July. And as price is still in a range, that could still happen. So I don't like to trade messy ranges, because there is a big difference between being able to read a schematic like an accumulation or a distribution schematic. It looks a little bit, once you're used to reading them, they look a little bit cleaner and you can kind of see what's going on. That big institutional funds are positioning themselves in the market to move higher or lower. But this one's a lot more difficult to read. But I do take note of where there are levels where price will be attracted to. So these highs and these lows, I take note of them. But as you can see, it is not clear to me anyway, which direction that price wants to head in. So when it's like that, and I've got multiple key levels, support and resistance zones clustered together, I try and stay away from that, because I can try and enter a trade. But if it's anywhere in this kind of region, I can just get chopped up unless I was to take a trade down here and then, just ride it up to the high of the range, because there's no guarantee that price is going to break out. So if I was hypothetically taking a long, let's say, because price is in the discount area of this range, if I was taking a long down here, I would probably look to take, what's it doing? I'd probably look to take partials up here and then take the rest of the trade off at the monthly high, which is this level. So if you don't know, I like to leave the monthly highs and the lows marked in on the charts, because there's some very interesting activity that happens around those levels. But anyway, that's all there is on Bitcoin. I do have another chart off to the left here, so sometimes I'll just look at both charts to make sense of what's going on. But let's go on to the Forex pairs, because I trade Forex. And we start with Aussie yen. These are just in alphabetical order. Aussie yen, interesting, because like I said, it is negatively correlated with the yen basket. So if I just flick back to the yen just for a minute, you'll see that it is a mirror image of Aussie yen. So there you go. While the yen has spiked up and is retracing bearishly, Aussie yen had a big move down and is now in a bullish retracement. So the previous week saw support, hold, and then just a very, very bullish candle, breaking through an intraday resistance level, holding. This is normal of yen pairs can be very aggressive in terms of the way they move, their price action. And this is quite normal to see an immediate rejection and then a full-on retracement. That's quite normal. And it's possible that, first, before I go any further, my eye has just been drawn to this level here. So as I say, doing market breakdowns where I'm talking out loud is new for me. I'm usually just doing this in my head with music playing, but I see that high there. Let's go down to the 4 hour. It will just be easier to show. This high, this purple box that you see here, this purple rectangle is just to delineate a Fibonacci retracement level, which I pay attention to. But I don't like to have the whole Fibonacci retracement drawn on the charts because it just starts to look a bit messy. But as I was going to say, if I was to see price quickly kind of run above that high there, because people who have sold short and have tried to hold this trade for it to continue go lower, price will come back up there, seek where the liquidity is, which is above that high. And if I see a move above there and then a sharp retracement, I'd be very, very keen to look to sell short. And this is why higher time frame or multi-time frame analysis is useful to me and important, because price could just be retracing that big move that we saw a couple of weeks ago and then continue its move to head further down. So something like this, retest of that level of support, an aggressive move up, which would induce people into buying, because when you see price aggressively moving in one direction, it will get traders trapped on the wrong side of the market, and then it aggressively retraces. Now people are scared. And then I'd be looking for something like some sort of pullback to then go short. But we'll see. I don't like to predict what the market's going to do. I prefer just to sit and watch and wait for price to give itself, I guess, give itself away, so to speak. Before I do anything else, I'm going to extend these levels to make sure I'm looking at the correct key levels for the week. Okay. So yeah, that's Aussie yen. We'll see. I mean, I could also still be looking for bullish continuation to head higher, because it's not completely unrealistic that the price will just head back into this resistance level and test these monthly highs, which are up here. And it could just continue. It could continue moving in this higher time frame range and just move down again, which would be great. It'd be lovely to catch one of those big moves again, as I did this previous week here. So on to euro pound. Yeah, I do like euro pound for a short, to be honest. Let's delete this here. Last week, I was suspecting a short on euro pound. First thing I'd say is that the exponential moving averages are widening here. So price, this long-term trend looks to be turning bearish, as the EMAs are bearish and stacking, which just means that the trend is starting to gather momentum. Those EMAs take a long time to turn around, so they really only, when they stack like this, it means a trend is becoming established. The other thing I would like to draw attention to, or stands out to me is, right, if I mark it on with an arrow, it will be easier to see. There is a rejection candle there, which means prices tried to move higher, rejected. Prices tried to move higher again there, rejected. And for a third week in a row, prices made a lower high and unable to break above the previous week's high. To me, that is a signal that bears are becoming exhausted, so to speak. And if bears are becoming exhausted, sorry, not the bears, I'm wrong. The bulls are becoming exhausted and the bears are taking over. So yeah, that's what I mean to say. Bulls are struggling to move price up and create higher highs. And when lower highs are being formed, it's showing that a potential bearish trend could take over. The other key thing is there's a break of structure last week. So last week I was looking for shorts, but they didn't quite materialize. If I go down to the 4 hour, so we'll see that that structural point has been broken. That's the first sign that the price is, well, it's not the first sign, it's just another confluence factor that price is turning around. There was a potential to go short here, but this is the advantage of trading just a few pairs, because when you're, it doesn't have to be pairs. So I trade Forex, so I've got 4 pairs, like I said, but if you're trading just a few instruments or 1 or 2 instruments, you get to understand the behavior of price and how it reacts, how it moves for that particular instrument. And it just makes you better at knowing or anticipating what may happen. So the reason I'm saying that is because when I see a low created, you'll see that low was created on Wednesday during London. From trading euro pound for a while now, I know that, again, it's all probabilities. I don't know this for sure, but it's always a probabilities game. When that low is created on Wednesday, it's not unusual for the low of the week. Even if you see a bearish move, it is not unusual for the low of the week on euro pound to be created on a Wednesday. And if price is bearish, it's not unusual for the high of the week to be created on a Wednesday as well. So what I'm saying there is euro pound it can have a big move for the beginning of the week, and then it might just range or retrace back into the range on a Thursday and Friday. Not always, but especially as the fact there were 2 things. There was a low test rejection wick here, a low test rejection wick there. So there's still sort of buying going on here. And also, I didn't really want to go short and trade when price is, breaking back up against a key level here. So there was no clear break below this level. So it shows that there's still kind of bullish price action happening and occurring at this support level. And that's what it is, right? I mean, support essentially is just an area where there's bullish price action likely to come back in, and resistance is just an area where there's supply and bearish price action is likely to come back in. So for me to sell short here, especially after seeing a low created here on a Wednesday, I could have sold short, but it wouldn't have really gone anywhere anyway because support was respected there. So if I see any kind of move back up at the beginning of the week in this area, I would probably be looking for shorts, and then it would give price more room to kind of, I guess, take a run up, break that level, test the level, and then break below. We'll see. Again, no prediction, but I'm just mapping out scenarios in my mind. We shall move on to euro pound. Right, euro pound. It's not euro pound, it's euro dollar. So euro dollar, if you remember me saying earlier, is just a it's negatively correlated or an inverse of the DXY, the dollar index. And this was a difficult one last week because if I go on, you'll see the weekly candle was again a low test doji, like ranging in between multiple key support and resistance levels here, which is, it's always hard to trade when price is bouncing around different levels. But I did take one trade last week and it was on euro dollar. It was almost like a tester trade. So when I take a trade and price doesn't follow through and starts chopping around, I'm probably not going to try and take any more, because you can just get whipsawed in and out of the market. Before you know it, I've taken 2 or 3 losses on a trade that wasn't ready, or a trade idea that wasn't ready. Let's turn that into support. So that's the daily. Again, you can see that's a tight range, but this right here, can't help but think that looks like a kind of distribution pattern. But again, when I look at the DXY, price is in a range. Eventually when it loads. So when I look at the DXY, and if you remember when I was looking at the weekly, it was creating higher highs and higher lows. And when I look at euro dollar, it's not, euro dollar isn't moving as sideways. There's still a little bit more of a kind of a bullish accent to it, if that makes sense. But I'm very aware that this could easily be a distribution pattern. So I took a long last week, took one trade. It was long at this support zone here. Price, what happened is I took it on Monday. Price then ranged for the next 2 days, which is not unusual because there was a CPI news announcement on Wednesday, New York Open. And what I'm noticing is that, especially during CPI or a CPI week, is that price will just range on Monday and Tuesday, and then volatility will come in on a Wednesday. So price broke above that monthly level, which was key. I'll go down to the 1 hour. It will be easier to see. Let's delete that. Okay. So now we can see the finer details. This is why I use multi-timeframe analysis, because you can kind of start to see the finer details. So things that aren't clear on the daily and the 4 hour now become clearer on the 1 hour. And the reason I was going long is because there was this clear break of structure, a massive, not massive, but an impulsive break above what would have been resistance, above what was the high of the month for July. And then as price comes down, it comes down very correctively. And that's usually a sign that price is struggling to go lower. And when price is struggling to go lower, it means that the path of least resistance is up, essentially. So I took a long in here, especially as the monthly levels can prove to be good support or resistance levels. And then I kind of just had to sit tight as price just ranged until Wednesday. But not going to lie, as I saw price push above, break structure here, push above that monthly level, I did think that price would probably come and retest this monthly level and then go higher. I posted a note about, it was funny, I posted a note. If I go down to the 15-minute, it'll be easier to see this. So as I'm long, price goes in my direction here, an impulsive break above that level. In my head, I'm thinking, oh, okay, price is probably going to come and retest support. If support holds, it will continue to go up. Now, the thought I'd had in my head is, oh, I'll add longs to my position in this area here. But I know that price can gyrate around the monthly level. Also, the DXY was not looking as strong as the dollar, as euro dollar, and the fact that I had not removed risk. So technically, as price moved up here, I still had risk on the table. I had not removed risk from my trade. So I would have added to my position and then taken a bigger loss as price broke through my stop loss, which was, I believe, somewhere down in this region. So this is about awareness, and I'm just being really honest with you. Even after 8.5 years, I still get these thoughts, and it's driven by greed. Essentially, it's driven by greed that, oh yeah, you know, if I just add to my position here, then I'll have double the position as it goes higher. But how do I know it's going to go higher? And it didn't. It went lower. Took my stop out. Yeah, so took my stop out here. Took these stops out below these lows, as you can see, that wick right there. Took those stops out, and then what happened? Bam, price just moved up, broke structure. So the higher time frame narrative did play out, but if I'm if I'm in a trade too early before it goes long, then I'm wrong. So I was grateful in the moment that I didn't add to my position there, and I ended the week with just one small loss. But yeah, this is why it's important to try and read the market profile. What I mean by that is, when I look at the environment of the market on the DXY, as I said, on the daily, it's clearly ranging sideways, right? Which means the euro dollar is flipped upside down, and it's going to range as well. But I just wanted to get in at the beginning of the week, because if I test the trade out and it doesn't work, its price is kind of saying to me, okay, this trade or this trade idea is not ready. And that's where I go, okay, I'm going to sit back, observe, and then I'm looking for more clues as to which direction to trade in. Back in the day, a few years ago, I'd have tried to force the trade. I might have tried to go as soon as I've seen a breakdown of structure here. I probably would have tried to sell short in here, but the direction just wasn't clear. And that's when, as a trader, it's important to learn when to just sit on the sidelines, protect your capital, mental capital, and physical capital. Because when you put a trade on, your mind's kind of still working overtime, so you're investing mental capital into that trade, and also you've put risk on, in terms of you've placed a trade, and that's a percentage of your account that is not available to you. It's gone until the trade is closed with a profit, a loss, or a break even. That's gone, and you can't use that capital until the trade is closed out. So sometimes it just, for me, this is why I prefer trading higher time frames, because at that point I'm able to kind of see the bigger picture, sit back and go, okay, this trade idea is not ready. Let me wait until I get more evidence and yeah, more confluence factors to trade. So last week, yeah, one trade, one small loss. Let's move on to pound dollar. It's the last trade, or the last pair that I look at. Right. Again, another interesting, oh, didn't mean to do that. Another interesting one. There's quite a few levels clustered here. I try and keep my charts so it's mostly just price action. Actually, while I'm here, I can see on the weekly that there is a resistance level right here, which makes a lot of sense. So I just draw this in now. No, it's not what I meant to do. Let's go back. Okay. So on the weekly level, I can see there is resistance there. I'm going to refine that in just a moment because I'll probably be able to see a little bit more on the weekly level. Let's look at that level there, and let's see right there. By the way, support and resistance is subjective. It takes practice to get to understand and see where the levels have been respected, and you're not always going to be perfect or right. But that's why it's important when you are using when you're using certain factors within your plan. It's important not to jump around from strategy to strategy, because you kind of need to train your eyes to see what you're looking for, which takes practice. So if I mark that in for now, I'll tidy it up in a moment. But first, I'd just like to draw your eyes to these monthly levels. So higher the month for June, higher the month for July, and it's no surprise that price has just ranged in between those two levels. If I go down to before I go down to the daily, let me just draw that in as a rectangle, because that will be useful to see what price is doing for the week ahead. I'm just going to mark in this resistance zone. Higher time frame resistance. And then as I do that, let's pull it out for the week ahead. Right, and let's go down to the daily. Oh. So in my breakdown last week, I did suspect that there would be a bullish continuation, because I'd marked in, you can see I'd marked in, it's just going to be easier to go straight to the 4 hour, to be honest. Sometimes you'll just see that there's some time frames that you don't need to labor on, because it will be clearer on another time frame. Right, so last week I did suspect, because price had broken aggressively above the monthly level, and there was a break of structure here, price continued up there, and then I did suspect that price might just come back into this, again, support level, dip below the monthly level, take stops here, and then move up, which is exactly what it did. But it's one thing reading the higher time frame narrative and understanding what direction might go in. So direction for me is a big thing, understanding the likely direction to trade in. But then there's a whole nother thing of waiting for your setup, which takes a lot of patience and discipline. And my setup didn't materialize last week. There was this break here below the monthly level. Price took that low there, and it's very interesting, because after that there was a big move up, kind of like on euro dollar, and this is what I expected to see on euro dollar. I kind of retested the level and then move up. Again, this is why I trade multiple pairs, because sometimes you'll see, especially on the dollar pairs, what I'll see is that euro dollar and pound dollar might look relatively similar, but there might be a cleaner setup on pound dollar one week than there would be on euro dollar another week. Usually If the DXY is bearish, both of them will be bullish. Not always, because the pound has a lot to say about it. But it will. I'll look at the price action and I'll just be, do you know what? This week, the price action on pound dollar looks cleaner than euro dollar. So I'd rather take that trade than on the other pair, because it's not just about, like I say, it's not just about reading direction. It's about waiting for the setup. Actually, on Thursday, I did take a day off, spending it with family, and I wasn't at the charts anyway. But there's a chance that I probably would have taken a trade in here, except for the fact, and again, I'll be honest, that for me to take a trade retesting this monthly level, like I say, I do like the monthly levels, but for price to retest this monthly level, I would have had to take a trade outside of my trading hours, which I don't do because it's not in my plan. So when I see a trade that sets up at 6 o'clock or 7 o'clock in the evening GMT, I know liquidity will start to tail off, and it just majorly reduces the likelihood of the trade working out. Don't get me wrong, I can hold over Asia, not a problem, but you'll see that it's quite unusual for the trade to start gathering momentum during Asia. And anyway, the price was already going in a bullish direction on the Friday as London opened. My preference is to execute trades as the session is opening. When I say the session, as London session opens, so around 7 o'clock, 7, 8, 9 o'clock is a cool time to take a trade. And then as we head into New York Open, volatility increases again, and those are good times to take trades. Asia, just for my plan and my data, it's not a good time for me to execute trades. So yes, it would look like that's a setup for me, but if I'm observing my rules, it's not one that I'm going to take because it's just outside of my trading hours, so to speak. So that's it for the week ahead. Trades I think I'm most interested in off the bat, Euro pound. Euro pound, the fact that I've seen, the fact that on the, if I go back to the weekly chart just briefly, you'll see that I marked it in here. The fact that I'm seeing 3 high tests of the resistance level and a failure to hold that level, 3 of those in a row, higher time frames are saying, yep, it's looking bearish. But again, this is when now I'm going to start observing on the lower time frames, the 4-hour and the 1 hour, to see if something sets up where I can execute a bearish trade. And then as I think about it, I see that that low just looks primed to be broken below. So liquidity draw there. And as I said, or as I mentioned, go down to the 4-hour. Just tidy that up. So that low looks prime for a break below that weekly low. And because it's a weekly level, it's even more likely to be broken below to carry on the weekly trend. But there are also stops from people who have sold short here. And I think, in my opinion, they've sold short prematurely. So it's likely that these stops will be taken, driven above, and then price will make its move. Again, not prediction, but that's just watching patterns play out over and over again. But anyway, guys, that's it from me this week. I hope you found value from that. That's me set up. I will jump on the charts Monday as well, just to finalize things and just get into the flow for the week. But like I say, I hope you found that useful. If there are any pairs that you would like me to break down, because like I say, I only trade 4 Forex pairs. There were loads. There were like almost 30, I think. So if there are any pairs that you would like me to kind of break down and look at, just drop a comment in the comment section below, and I will kind of take a look at those the following week. But yeah, let me know how you're finding this. I hope you're finding it useful. This is a process that I go through anyway, every single week without fail. If I don't go through this, I don't trade. I'm not just going to jump on the charts without doing my analysis, looking at where the highs and the lows of the week have formed, looking at what price is doing. There's no way I'm going to do that without jumping on the charts, because it's all about following processes. So yeah, like I say, my commitment is to share this, and hopefully there is value gained. But I will leave it there for now, guys. And yeah, have a great trading week. And until next time, God bless. And I will see you soon. Thanks for watching.